welcome back to another video. Stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. Hey guys, if you want to follow me when I'm not on YouTube, do me a big favor. Get down in that description box and click on my Instagram link. It's Richard Fain Millionaire Mentor Instagram page. Click on that link, get yourself over to Instagram and give me a follow. And then send me a DM letting me know that you rock with me. I really would appreciate that. Some of you OG subscribers will know I had a previous Instagram page, which was Richard Fain 28. That page had over 90,000 strong, 90,000 followers strong. And unfortunately, that page was disabled back in December of 2023. So I created a new page, and that's the Richard Fain Millionaire Mentor page. And we got a little under 5,000 folks following on that page. And I do put a pretty fair amount of content on that page. As we get more followers, I'll get more content. So if you're an Instagrammer and you like Instagram and you spend a little time on Instagram and you want to keep up with me when I'm not on YouTube, then like I said, get down to the description box, click on that Instagram link, Richard Fain Millionaire Mentor Instagram page. Well, thank you guys for showing up again this evening. This is the evening edition of my YouTube channel, live stream. So I'm kind of, messing around with different formats. I got a 10:30 a.m. Live stream that I do every morning. And then I started thinking, why not do an evening just to kind of give a recap of the day, what's happening in the stock market, what's happening in the housing market, what's happening with inflation, what's happening with interest rates. So I thought I'd do that and see how that goes, see how you guys like that, see if we get anybody to stop in. And my first one was last night, and we had a pretty decent audience, right? It was a pretty decent live stream, and we got a lot covered. It's going to be a little shorter than my morning live streams. Those are normally an hour and a half. This is going to be no more than an hour. It'll be shorter than an hour, right? We want to keep the evening live streams to under an hour. The morning live streams, I normally go about 90 minutes. So thank you for you guys who are already in the chat and hanging out with me. We got a lot to cover. We're going to talk about Nvidia and its collapse today, stock collapse. We're going to talk about the S&P 500 and what's going on with the S&P 500, right? And then we're going to talk about Tesla. Yes, sir. We're going to talk about my old OG stock, Tesla. Why I believe it's going to be a winner here in the next few years. We're going to talk about that too. But before we dive into all of that, guys, I got to tell you about a couple things that are near and dear to my heart. Number one is my website, www.richardfain.net. That's the new website. Got digital products, 10 of them to be exact, that were handpicked by me. Over 175,000 of you guys over the last 2 months that it's been up have visited the website all organically, just from me telling you about it here on the YouTube channel. So thank you so much for doing me that big favor and going checking it out. And a lot of you guys, like I said, have bought some of the digital products. Matter of fact, a lot of you have. So thank you. Thank you for making an investment in yourself to get you to your pot of gold at the end of the rainbow, which is the most important thing to me, is to provide you guys information, whether it be on the live streams, the edited videos, the website. Hey, my goal here is to provide information to help you get to your pot of gold at the end of the rainbow. And a lot of you guys have already taken advantage of that. So I'm going to ask the folks that have not been over to the website, go down to the second link in the description box. That's the website link. But I'm going to give it to you right here too. www.richardfain.net. That's the website. Go over there, check out those digital products. We got everything covered. We got real estate investing, we got credit, we got businesses, we got stock market, we got getting the filter system right, changing your behavior with money. We got all of those things over there as digital products to help you in all of those areas, to help you get to your pot of gold at the end of the rainbow. And then we got the mentorship club. And you can join the mentorship club through the website. There'll be a join button or a membership button. You can hit that. It'll take you over to the platform and you can sign up. That's the only place that I do mentoring. Now, in all fairness, so you're not blindsided, it is a paid mentorship fee, a monthly subscription fee. So you're not blindsided. That's where the mentoring takes place. Now, I know the platform has a free option, but that's the platform's doing. That's not my doing. My time's valuable, just like your time is valuable. So if I'm gonna be mentoring folks, then obviously there's some value that we gotta exchange, right? And that's what the folks that are already on there have agreed to. And I don't think anybody on there can tell you that I'm not active. I'm very active on that platform. I'm there to answer their questions based on my experience. We have other people in there that have a lot of experience as well that can also help. See, that's the whole key, guys. We're a family over there. We help each other. We encourage each other. None of us are trying to be the expert, and none of us are trying to tell people what to do. When people ask us our opinion on something, we give it, right? And that's the environment we want. And then, of course, if you want me on a daily basis to answer questions and be a part of your mentorship team, be a part of your gang of five, you have that through direct message. You can direct message me anytime, 365 days a year, as many times, unlimited. You can direct message me, hey, Richard, here's my situation. Can you give me some of your expertise on this? That's what I do over there, but that's the only place I mentor. So if that's important to you, being a part of my mentorship group, and you want me to be your mentor, then get over there and check it out. Last thing, and then we're gonna dive in, which is my self-directed brokerage app, Moo. That's the brokerage app I'm gonna be using over the next 10 years to quadruple my net worth. That brokerage app is something that I started using in January of this year, and I've been using it ever since, and it's fantastic. It's self-directed, a lot of tutorials, a lot of information, world-class customer service if you need help, but you need a brokerage account. Now, I know a lot of you folks that watch me are already well on your way. You have your brokerage account set up, and you're just here to get you some tips and nuggets and some golden eggs, and you already off and running. But I'm really talking to the people who are brand new or who are brand new to investing in paper assets, who don't have a brokerage account, who are not comfortable, just opening a brokerage account and not knowing how to use it. Then I'm talking to you. 18 to 80, if you're looking to build paper assets and buy paper assets to build wealth, then check out the Moo link down in the description box. First link, open up your new Moo account. They're gonna give you 5 free stocks when you put $100 in your brokerage account. They're gonna give you 15 free stocks when you put $1,000 in your brokerage account. And then you're gonna send me an email over to the website, www.richardfain.net. Send me an email and say, Richard, I opened my Moo account, I funded it. Send me the Moo tutorial video so that I can learn how to use the app. Real user-friendly, easy to understand. You can watch them 1,000 times if you want to, if you miss something. That's the beauty of it. You can watch those videos 1,000 times, guys, until you get comfortable with it. And then I'm gonna send you my blueprints, 1.0, 2.0, my wealth transfer blueprints. It tells you everything I'm investing in, including Nvidia and Tesla through the Mag 7, my ETFs that I invest, everything I invest in, it tells you. And it tells you why. So those will be good information for some of you guys who are brand new and don't know anything about anything. At least you'll know what the guy on YouTube you're listening to is doing. So do that, get down in the description box, click on the Moo link, put some money in there, get your free stock, send me the email through the website, and then I'm gonna send you that information. Well, all right, guys, we ain't got but an hour, so let me get going here. Woo, what a tough day for Nvidia. Started off the day, guys, like the sky was the limit. I mean, it started off like a freight train. The thing opened at $140 a share. And then it ended at about $130 a share. So up $10 early on, and then boom. We're gonna talk about why. Let's do that. Let's talk about, y'all know I'm bullish on Nvidia. I think it represents a great opportunity to build wealth in my portfolio. I'm bullish on it, right? If you know anything about this company, they're an amazing company. But even amazing companies, from time to time, guys, have a down day in the stock market. And I'm not discouraged. It don't bother me. I didn't blink an eye. Matter of fact, it was an opportunity for me to buy more, right? It was an opportunity for me really to pick it up at a discount, because I think $130 per share is a discount. Seeing that it already hit 140. That's a discount at 130. I had one of the people over in the mentorship group. I was reading one of her comments. She said she put her offer in at 140. For some reason, it didn't go through. Next time she looked around, it was 130. She hurried up and bought it. I was like, hallelujah. I bet she was saying, hallelujah, I just got a discount. This thing was trading at 140. I messed around and didn't get the trade made, and messed around and it came back and it was 130. And I'm like, I just made myself $10 a share for just missing the 140 trigger. So, you know, again, totally okay. So don't panic. But let me run you through some of the things that are being said, and then we'll talk through it, and then we'll move on. Here's the headline. Nvidia stock endures a 277 billion midday sell-off as AI giant falls behind Microsoft. So now you spend one day as the most valuable company in the world, and then you have a midday sell-off, right? People taking profits, basically. You have a midday sell-off, and then you fall right back to number 2 spot. You lose 277 billion in market share, just like that, right? That's crazy. But the key word is sell-off. Why did they have the midday sell-off? Let's talk about that. So let's take a look here. Nvidia stock suffered a rare tumble on Thursday, relinquishing the artificial intelligence motors briefly held title as the most valuable public company on the planet, and exhibiting broader stock indexes sensitivity to price movements for Nvidia. Now, all that means to me, guys, let me just give you what that means to me. This is how it works. As these companies' stock price go up, you either get to a point where the market will accept the price as it pushes up, right? It'll accept it, or it will reject it. And in this case today, my belief is, as the stock continues to push up, right? As it pushed up from, it closed, I believe, on Tuesday, it closed at 135. Market accepted that because it kept climbing. Even after hours, it climbed a little more. So the market accepted that price. Then we have Juneteenth on Wednesday, the market's closed. So then on Thursday morning, pre-market, it's already jacked up to 140. Now the market has not accepted the 140, guys. The last time the market accepted a price for Nvidia stock was on Tuesday. It accepted a price at 135, and that's where it closed. Now, between Tuesday when it closed to when the market opened up on Thursday, there was some momentum gathering. So the pre-market had it at $140, but the market still had to accept it once the market opened. So when the market opened at the 140, quickly it was rejected. And you started seeing the stock come down, 140 to 138, and 137, and then bop. and it closes at 130. So what you have here is the market saying, nah, we ain't ready to accept 140 yet. Now that doesn't mean tomorrow it won't accept it, right? Doesn't mean tomorrow it won't accept it, but today the market did not accept it. Nvidia stock sank by as much as 8% from its early morning all-time high to its afternoon nadir, or whatever that is, with its share price down 3.5% on the day to 131 by close, reversing what was as much as 4% gain shortly after Thursday's open. So 135, it closes on Tuesday, opens up at 140 briefly, market rejects it, loses 8% down to 130. Right? Is that a problem? I don't think so, and we'll talk about that. So the intraday swing erased the 277 billion of Nvidia's market value, which sank to 3.27 trillion, placing Nvidia behind Microsoft after exceeding the market capitalization of the more established tech firm Tuesday. So on Tuesday, they passed them. Unfortunately, it just couldn't keep up with it, right? Couldn't keep up with it. The market basically said no to the 140 price. They rejected it. Had the market accepted it, it could have went to 145, but it did. It rejected it. So we'll be back at this thing tomorrow to see what happens. But here we go. Okay. There was no clear catalyst for the Nvidia sell-off. There was no clear catalyst for the Nvidia sell-off, indicating it was likely a matter of investors taking profits after the stock's 170% rally year to date and 800% pop since the beginning of last year. Does that make sense, guys? So you got to understand, guys, people have been in this Nvidia stock for a while now. A lot of us are maybe just getting in, but you got people been in this thing, man, before the split, before 2024. You got people who got in this thing back in 2022 when it was trading at $190 a share. See, we're brand new in this thing. A lot of us, we're brand new in Nvidia. But you got people that have been in this thing for a minute, man. And what you're going to find, guys, is people are going to take profits. Whether they take complete profits and exit the stock altogether, or they take partial profits, maintain a position in the stock, but they take enough out to make them happy and get them where they need to be in their financial freedom. So we got to understand the psychology of what's going on here. We're brand new in the stock, a lot of us. Now, I know some of us in the chat have been in the stock for a while. I get it. But I'm going to be honest with you. I'm outside of the Magnificent Seven. I'm brand new in the stock. I'm brand new in this thing over the last 3 or 4 months. I mean, I'm brand new since April is when I really start buying it individually outside of the Mag 7. So a guy like me, I'm brand new in this thing. But you got people been in this thing for 2 years. I mean, been in this thing for a minute at different prices. Think about it. If you came in this thing at $190 a share 2 years ago and you saw the 10x run up, and now you're just seeing a run up from the split of 120 to 140, you probably swimming in cash. That's hard to reject, taking cash out at that point. So that's what you see people do. Whenever you see a big run up, you're going to probably see a slight run down because people are taking profits. So let's keep moving. Right? Let's keep moving. So it says Nvidia stock is still up 40% over the last month alone. Even with the decline today, guys, even with the rejection, you're still up 40%. Think about it. Think about a lot of us brand new people into Nvidia who bought on June 10th at the split. Think about it. Think about some of you guys who bought at 117 a share. Think about some of you folks that bought at 120 a share, 122, 125. You're up, guys, right? You're up. And also, let's think about, what are we really trying to accomplish here? We're trying to build real wealth. Just like them folks did in 22 when they bought that thing at 190 and rolled it up to 1200 pre-split. That's wealth, guys. Anybody that got in at that 190 and stayed through all the hurricanes, all the forest fires, all the flooding, everything they stayed through, and they stayed steadfast and they believed in this company, they got the reward. They got the reward. You got in this thing at 190 and you saw that thing 10x, you got the reward. I want that for my money. I want that same 10x. And I'm willing to go through the hurricanes, the floods, the fires, the tornadoes, all of it, to get my 10x. I don't know why you in this stock, but I'm in this stock to get a 10x, baby. I want the same thing them cats got in 22 when they got in. And went through all the disasters, all the catastrophes that you go through in the stock market streets, that you go through in these stock market streets, right? I'm willing to go through what you got to go through in these stock market streets on this second time around. I believe this company has an opportunity to 10x again. I'm not going to be worried about the fluctuations. I keep telling y'all, if you got to be built for this thing, guys. You ain't built for it. If you ain't built for a $10 per share drop with no catalyst other than people taking profits, because ain't nothing changed in the company. The company's still the 900-pound gorilla. Ain't nothing changed in the company, right? So all I'm telling you is, if you're not built for it, take your profits and get out, man, because this ain't nothing. We're going to go through a lot more financial hurricanes, a lot more financial floods, a lot more financial tornadoes if we're trying to 10x this thing. So this is just this ain't nothing. What you going to do? You get this thing up and all of a sudden we hit a little bear market and this thing tumbled by 20, 30%. Then what you going to do? If you ain't built for it, you're going to drive you crazy. You might sell. You might panic sell, which is the worst thing to do. If you ain't built for this mentally, you're going to panic sell. You got to be mentally built for this thing, guys. You got to understand the cycles of the stock market. You got to understand this is naturally what happens to companies, or all companies. But that doesn't mean it's a bad company. That don't mean it won't rebound. Think about when they were $767 a share in April. Do you think they rebounded? 2 months later, they were $1,200 a share. Yeah, 767. They rebounded pretty nicely over 2 months. Just ran up to $1,200. So, hey man, be ready, right? Be ready. So let's keep moving. You're still up, what, 40%, right? Still up 40% in 1 month though. Here we go. Critically, the Tuesday dip demonstrated the broader market sensitivity to Nvidia's stock's performance as the S&P 500 turned its peak 0.3 morning gain to a 0.6 loss, right? Even the S&P jumped out. And we'll talk about that in a second. With almost all of the fall explained by Nvidia, especially Nvidia's intraday slide, erased the equivalent of Coca-Cola, the S&P's 27th most valuable company with a roughly 270 billion market cap, from the index. So you think about what they lost today is basically a whole Coca-Cola, the whole Coca-Cola company. What they lost in one day, 277 billion market cap, is the whole Coca-Cola company. And y'all know Coca-Cola been around for 1,000 years. Coca-Cola been around forever. That's like apple pie in America, Coca-Cola. They got erased. This is how big this company is, guys, from a market cap. $277 billion is more than the market cap for Coca-Cola, which is like apple pie here in the United States for you people in front of the United States or listening from other countries. That's like apple pie. That's part of the fabric of America, Coca-Cola. That's how big Nvidia is, though, guys. You can lose a whole Coca-Cola. That's just wild to me, right? You can lose a whole Coca-Cola. It is highly normal for a stock to decline after a sharp increase like Nvidia just had. Broad index funds have benefited far more from Nvidia's inclusion than they've been hurt. With Nvidia's $2 trillion market cap added in 2024, accounting for a third of the market cap weighted S&P 500 15% year-to-date gain. So the 15% that the S&P 500 gained this year-to-date, they're telling you a third of that is just Nvidia. A third of it. You got to understand, you got 500 companies in the S&P 500, guys. A third of the 15% year-to-date gain in the S&P is attributed to Nvidia. This is how massive their run-up has been, right? It's massive. Nvidia, which produces the majority of the semiconductor technology, we already know all of that, right? So we ain't gonna go into that. So that's what happened, guys, with my favorite individual stock, Nvidia. That's what happened today. I think it was just the market was not ready to accept a $140 stock price, so they rejected it. And when the market rejects your price, if the market rejects it, the price goes down till you hit a level that they will accept. And apparently $130 a share is where it closed. That's what they wanted to accept today. Now on Tuesday, they accepted $135. So I know the stock will go higher because the 135 has already been accepted, guys. See, this is why I try to get some of you guys to understand. When you've already set the precedent and there's nothing materially wrong with the company, the stock should go back to 135 at least. It's already been accepted. I mean, the thing closed at 135 on Tuesday. The market accepted it, right? So all I'm telling you is the 135, no problem. We'll get back to that. Maybe tomorrow, maybe next week. We'll see. I still think before the end of the month, we may be knocking on the door of $150 a share. That's my guess. I don't have no, I ain't got no proof of that. But I'm just telling you what I think this company is capable of. What I'm trying to get you to understand is if you're in this stock or if you're in any stock, you got to figure out what you can go through. Right? If you're in a fast-growing, hyper-growing stock like Nvidia, you're going to have volatility, guys. I told you, you're going to have financial storms. And you better be built for this thing. Or get out. Take your cash and get out. And go put it in a mutual fund or some CD at the bank where you ain't got no volatility. You ain't got to go through no financial storms. But if you want that reward, if you want that big old reward called financial freedom, oh, it ain't free. It ain't, oh no, you got to pay the financial price to get that. Because if it was that easy, everybody would be at freedom, guys. Everybody would be at financial freedom if it was that easy. Clearly, it's not. So you're going to go through some financial storms if you want to get to this pot of gold at the end of the rainbow. That's why it's a rainbow. You got to go through something. You're going to go through some rain, some hail, some tornadoes, some hurricanes. You're going to go through all of those financial things to get to this pot of gold at the end of that rain. See, the rainbow comes out after everything's done, right? The rainbow comes out after everything's done. So you ain't done nothing. You don't get no rainbow. You get the rainbow at the end, not in the beginning of the storm. You get the rainbow at the end of the storm. You got to get through the storm. You don't get the rainbow before the storm. Oh, there's a beautiful rainbow, but here's a hurricane coming before. No, you get the rainbow after the storm. So if you're willing to go through the storm, you get the rainbow and the pot of gold at the end of the rainbow, but you got to be built for it. If you ain't built for it mentally, get out. Take your money and go put it in a CD at the bank. Take it and go put it in a high interest money market account. Go put it in a U.S. Treasury. you'll do great. And then you ain't got to go through no storms. But if you want this, you're going to have to go through some storms, baby. So put your storm gear on, right? Put your financial armor on, put your storm gear on, and get ready and get your mind right. And know and understand these cycles in the stock market. That's why I have these videos every day to give y'all my opinion. I'm no stock market expert, but like I said, man, I've been doing this for a long time. I've been through all the cycles over the last 30 years. And not one time did I quit or get out. Why? Because I know I got to go through some financial storms and to get to the rainbow. See, a lot of us don't want to go through nothing, but we want the rainbow. We don't want to pay the price. We want the rainbow. You don't get the rainbow until you pay the price. So if you ain't willing to pay that financial price, then there's a little bitty rainbow over here at the bank. That's a little one of them little bitty ones. But if you want the big rainbow, oh, you're going to pay a price. You go get the little rainbow, the little bitty one, with you ain't got to pay no price for the little one other than put your money in a CD and get your 2%. And if you can live off 2% when inflation is 3%, good luck. Your money ain't going to go far. You're going to get a 2% CD, 3% CD, but that's not going to be enough for most of us. It won't be enough for me. Not in the building stage of wealth. Now, if I'm in the enjoyment stage of wealth, it might be enough, but not when I'm trying to build wealth. All right, let's move on to the S&P. Here's the headline. S&P 500 closes slightly lower after briefly breaching 5,500 points. Come on, guys. This thing won't stop. I mean, at the beginning of the year, guys, pretty much across the board, only a couple analysts at the beginning of the year had the S&P hitting 5,500 points for the whole year. We've hit 5,500 points, guys, and ain't even through the first 6 months of the year. Wow. I didn't even know that because I wasn't watching. Like I told you, I don't watch the stock market that much. I just put my money in and, until I'm prepping for one of the live streams, I go look at it. But other than that, I don't look at it all day long. So I didn't even know the S&P till I was prepping for this afternoon live stream. I was like, 55. Here we go. The S&P 500 pulled back on Thursday after briefly passing the 5,500 level for the first time ever. Let me make sure y'all understand that. 100 years. Never hit 5,500 points. Right? Right? That's why I keep telling y'all this whole notion of, oh, it's going to go down. Oh, it's going to go. Well, maybe I should wait. Let me time the market. Okay. Now if you'd have did that in January, had you been in January, you'd be up 600 points already. If you bought an S&P 500, like I had been recommending to everybody, hey guys, get your broad-based stock market ETF S&P 500. It's a steady Eddie. It's a steady Eddie. You need a steady Eddie in your portfolio, guys. Everything can't be a home run. We need a steady Eddie. That's what the S&P 500 is. Y'all, some of y'all older folks know what a steady Eddie is. Just a solid guy. Not too high, not too low, but just solid. Just a solid guy. He's a steady Eddie. That's what the S&P 500 is. It's a steady Eddie. I gotta have a couple steady. No, I need at least one steady Eddie in the portfolio. Right? Predictable. Ain't gonna be too crazy, ain't gonna be too low, no too high, no too low, but just predictable. I'm gonna get that 8 to 10% rate of return over the next 10, 15 years, no problem. That's the steady Eddie. So guess what? The steady Eddie is starting to go up. I'm up 15% on my steady Eddie. Wonderful. Wonderful. I'm up 15% on my steady Eddie. Every portfolio needs a steady Eddie, right? Because see, if you're gonna go get the Woodrow, y'all ever watch Sanford and Son? I know some of y'all old school cats and watch Sanford and Son. Y'all remember Woodrow on Sanford and Son, Esther's husband, Woodrow. That's what the video is. That's a Woodrow. Boy, we don't tell it what Woodrow gonna do, right? I look at Nvidia as a Woodrow from the 70 Sons. That's a Woodrow. But I want a steady Eddie too. I don't need this volatile, unpredictable, alone. I don't want all my money in that, even though now it could go to the moon. It could go to the moon. But that's a Woodrow. I need a steady Eddie. That's the S&P 500. Okay, so let's keep moving. Let's keep moving. Nvidia gave up earlier gains. We know that. We've already talked about it. The behemoth Nvidia gave up earlier gains. We talked about that and why. The broad market index fell 0.25% to end at 5,473. Earlier in the session, the S&P 500 rose as much as 0.34% to hit a new high. The NASDAQ dropped 0.79% to finish at 17,721. Still, guys, killer. We're looking for 20,000 out of the S&P. We're looking for 20,000. We're looking for 20,000. That's what we're looking for. That's what we're looking for, right? We're looking for something. We're looking for 20,000 in the S&P. And with what's going on in the tech industry, we may get that this year. We may get 20,000 in the S&P this year, fellas and ladies. We may get it. Let's just keep pushing forward, right? Let's keep pushing forward. The Dow jumped 299 points or 0.77 to close at 39,134. We're looking for 45 out of the Dow this year. We already hit 40. So the market already accepted 40 for a little bit. Didn't accept it for long, but it dropped back down. But the market, it hit 40, but I'm looking for 45. So here's my prediction. Here's what Richard Fain's looking for my portfolio. For my steady Eddie, right? For the steady Eddie, I'm looking for a 6,000 S&P 500 to end the year. For my steady Eddie ETF, my S&P 500 SPOG, my steady Eddie, I'm looking for 6,000 point S&P 500 index. For the NASDAQ, which is my FTEC, right, information technology ETF, I'm looking for the NAS. I'm looking for the NAS to be over 20. I'm looking for the NAS to be over 20. Right now, year to date, in my information technology ETF, I'm up 25%. Just a cool 25%, right? And in the Dow, I'm looking at a 4,500 points, right? Looking for 4,500 points. And what am I looking at for my big boy standalone? Let's start with the Mag 7. The Mag 7, I'm looking for to maintain my 35% where I'm at right now. I'd like to get that up to 50% return this year. Given that in 2023, they did 100%. Yeah, they did. Go look it up. Mag 7 turned 100% last year. ROI. I'm looking for 50% this year in the Mag. So I'm looking for 15% in the Steady Eddie. I'm looking for 25% in FTEC, which is Information Technology ETF. I'm looking for about 50% in the MAG. I'm right now, year to date, I'm about 36, 37 right now. So I'm looking for 50% out of that. And then in the big boy 2.0 Nvidia play, I'm looking at a $200 per share stock price by the end of the year. I'll double my money in less than 7 months. I double my money. I double my money in 7 months if that stock price can get to $200 a share, which I believe it has a shot. I believe it has a shot. I keep telling y'all, the really important catalyst for Nvidia is going to happen on August 28th, 2024. If they go triple digits in the second quarter earnings report on everything, we're going to the moon again. We're back. We're going to the moon again. Another trip. I'm just telling you, another trip. But that's what I'm looking forward to the rest of this year, and I'll keep you guys abreast of what's going on. If you tune into the channel, I'll keep you abreast of what's going on. Let's keep moving. Seasonally adjusted, it's a low volume period for markets, and there doesn't seem to be a whole lot driving things on a day-to-day basis. You're starting to see some signs of getting a little bit overextended, but there's been an incredible amount of momentum which has continued this week. Right? So there we go. I'm good. I'm optimistic, guys. I'm optimistic. What happened with Nvidia today? I ain't mad at people taking profits, man. Get that money, man. You deserve it. Ma'am, sir, get your money, man. You've been in this thing since 2022. You jumped in this thing early 23, and you've been going through the financial storms, and you weathered them all. You got your mind right. You built for it. Man, congratulations. You just got rich. I was looking at something earlier where it said 34 investors in Nvidia. 34 investors in Nvidia have made like so many billions of dollars already. Isn't that amazing, guys, how you can invest in a company like this if you do it right, and you can come out of this thing a millionaire. Boy, I love that. I love that. I so love that. And boy, am I so ready to be a part of that team, a part of that group. I wish I could find the article. I'm gonna find it though. I'm gonna find that article, and I may try to find it and talk about it tomorrow, but it's an article that I saw that I should have grabbed, where it's talked about 34 people who became billionaires. I don't know, man. I don't know about y'all. I ain't trying to get to the billion. I just want to make a million. I want to be a millionaire just off of the Nvidia stock. So here's the thing. I don't know if I'll get there, guys. Maybe, maybe not. I don't know. But I'm built for it. I'm going to go through all the financial storms. I'm going to watch this thing go from $120 a share. I'm going to watch it go to over 1,000. That's my goal. I'm going to do everything in my power to stay in the stock as long as there's no material change in the company. It's the only way I bail on the stock is if the company is a different company than when I started investing in it. And I mean for the worse. If it's the worst company than when I started, that's when I'll bail. But if nothing materially don't change, I don't care if we go to a 50% drop in the economy or the stock market. I'm gonna buy more as long as the company doesn't change, right? That's the key for me. I keep my eyes on the company. I don't worry about the market. I don't worry about the economy. I just keep my eye on the company. Because if that company stays doing what it's doing, at some point, the market corrects itself. And good companies do what? Go from a discount back to a premium. Good companies. That's why you got to keep your eye on the company. Stop with all this other noise out here. Keep your eye on the company. They'll tell you everything you need to know about the stock, right? So let's talk about Tesla real quick before we wrap this thing up. And then before we do, guys, if you want to be a part of this incredible opportunity that I'm telling you about today and all these great companies, these great ETFs, you got to get down to the description box, click on the Moomoo link, sign up today for Moomoo, put you $100 in the account, you're going to get 5 free stocks. You put $1,000 in your new brokerage account, you're going to get 15 free stocks. Then you're going to send me an email and say, Richard, I opened my Moomoo account, I funded it. I need you to send me those tutorial videos. I need you to send me the blueprints. I need you to give me this information that I can digest it and learn how to use this app. And I'll send that to you. But you got to send me an email through my website, www.richardfain.net. Second link down in the description box. I welcome all you guys to sign up and get this free information so that you can perhaps change something in your life. Okay, another great company, according to Richard Fain. Just my opinion. I know a lot of y'all don't like Tesla. I love Tesla. I'm upset with myself because in 2020, I should have been rich. I should have made $1 million in Tesla. I should have, but I stayed on the sideline because I was brand new on YouTube and I was trying to figure out, I just concentrated more on the YouTube channel, which at the end paid off, but I didn't pay much attention at that time to the stock market that much. I talked more about real estate because interest rates were low. People could buy. I didn't talk about the stock market as much in 2020 like I do now, because the dynamics have shifted. When interest rates go up, it's hard to talk about real estate because a lot of people can't afford rental properties. When interest rates go down, you can talk about real estate. See? So in 2020, when interest rates were down, I talked a lot about real estate, a lot about credit card arbitrage, because interest rates were low and you can use other people's money and make money. So I talked a lot about that, and I just didn't even pay attention, but I could have got rich again. Could have made $1 million plus, missed it. So I came in on the tail end and got into Tesla in 22. I got into Tesla in 22. I think it was 22. Yeah, I got into Tesla heavy in 22. And on the tail end of it, right? It was after the 3-to-1 split, and I thought it would bounce and do something, but it didn't. I made a little money in it, but not life-changing money, right? Because I just missed it. I just waited too late. I missed. But Cathie Wood, ARK Investment, big Wall Street firm, says, hold your horses, Richard. You may get another bite at the apple. So let's talk about it. Cathie Wood's stunning new $2,600 Tesla prophecy and Wall Street's Nvidia stock prediction share on often overlooked investing truth. So let's see what Cathie Woods has to say about Tesla, and why does she think it's a $2,600 per share stock? Now I got some money in Tesla right now in the Vanguard rollover IRAs, big position that just sits there. It ain't making no money now. Matter of fact, I'm down on it, right? I'm down on it right now, but I still think 10 years from now I'll be okay. That's why I don't sell it. See, that's why I keep telling y'all guys, I'm not going to sell a company if I believe the company still has an opportunity to do wonderful things, great things. And I think Tesla does. They're still #1 in their industry. They still got the #1 charging network in at least in the United States. I don't know about the world, but definitely in the United States. They're the #1 EV company in the world when it comes to profit. Now, you might have companies out there that sell more or make more, but they don't make more profit per vehicle sold than Tesla. They don't. Right? So Tesla is a 900-pound gorilla in the EV market, so that's why I still keep it. And I like Elon Musk. Right? So let's talk about this real quick before we end this. On June 13th, this individual who wrote this article said he posted a story asserting that giant run-up in its market cap of $3.1 trillion made it virtually impossible for Nvidia to grow its sales and profits at the lightning pace needed to reward shareholders. The same day, Cathie Wood, chief of ARK Invest, appeared on CNBC to champion her firm's new breathtakingly bold prediction for Tesla's stock price. Now, this is Cathie Woods. Go look her up on the internet. Wall Street firm. Has done well. Relatively new fund, but it's done well, right? And she's very respected. So she goes on CNBC. Wood, right? She said that the EV leader's shares would hit $2,600 per share by 2029. What's today? 2024? 5 years. That's another 7-figure deal if that happens for the stock that I got right now, and plus what I'm getting ready to buy more of since Cathie Woods came out and said this. I'm going to put that in Blueprint 3.0. So y'all know I already got Chipotle after the 10-to-1 split going into 3.0. I got Broadcom after the 10-to-1 split going in 3.0, right? I got Visa, no matter what's going on. I know they're getting sued and all this stuff, but still, Visa and MasterCard control 90% of the credit card network in the world. So I don't care who's suing them, don't make no difference. Don't. They're never gonna plead it to any guilt. They're gonna settle and say we ain't did nothing wrong. They probably did, but they're gonna say they did. But they control 90% of the market share, Visa and MasterCard. So Visa's going into the portfolio, and now more Tesla's going in since Cathie Woods has came out and said, hey, this is what's going to happen. Because I respect her for what she's done. I respect her mind, right? And I love Tesla anyway, so it ain't no stretch for me. I love Tesla anyway. So here we go. Wood said the EV leader's shares could hit $2,600 per share by 2029, almost 15-fold its current level of 175. In a report issued the previous day, 3 ARK analysts provided the financial metrics it expects Tesla to reach 5 years hence that justify that never before witnessed moonshot in value. Their work mightily impressed Tesla CEO Elon Musk, who tweeted, "I think it's worth looking at ARK's analysis. I think that's the most accurate analysis." So you know your boy got excited. I got excited. I gotta admit, guys, I had a little bit of a doubt, but now that little doubt is poof, it's gone. Poof, it's gone. I'm back a Tesla fanboy all over again. And guess what? It's going in 3.0. It sure is. It's going in 3.0. And I'm just gonna throw it out there and just watch it develop and see what happens. Now I'm gonna hunt down this analysis. I'm gonna hunt it down. I'm not sure I'm gonna be able to understand all of it. I'm not gonna be able to understand all of it. You know I'm gonna dumb it down because I gotta dumb it down for me. So y'all know I'm gonna give it to y'all the old 3rd grade level way, because that's all I know. I mean, I wasn't very good in school. So y'all gotta go to a different channel if you want a really smart guy or gal who can articulate all this stuff. I can't do that. I can just give it to you my little simple, you know. I can't. But I'm gonna find the report, and if I can get through it, I'll bring it to you guys. But if I can't, there's nothing I can do. So here we go. There we go. So stacking Nvidia's challenges versus Wood's stunning new Tesla prophecy. Comparing the heroics Nvidia must achieve to prove a good investment and the feats Wood expects from Tesla makes her forecast look like the bigger fantasy. I don't think it's a fantasy. In the Nvidia piece, I stated that to deliver its shareholders a relatively modest 10% annual return over the next 7 years, Nvidia would most likely need to double its market cap to 6.2 trillion by 31. Well, we're well on our way, buddy, because we're going to be at 5 trillion at the end of the year. We're going to be at $200 a share by the end of the year. That's my prediction. My prediction. That don't mean it's coming true, but it's my prediction. I spare you the details, but the estimate that getting there would require by the end of that time frame is a 200 billion in annual net earnings and 580 billion in revenues. Why can't we get there? I don't understand why we can't get to 580 billion in revenues by the year 2031. Again, I think we can. I don't know about this guy, but that's okay. He's the expert. I'm just a regular old schmegular old guy. So he's smarter than me. He probably got more degrees than me. He's probably got a better SAT score. Probably got a better ACT score. He probably got better grades than me in college. He probably got his IQ probably higher than mine. So I don't know. He probably got all the credentials too, right? Big firm, big Wall Street firm, big desk, 10 people working for him. I'm just a regular old guy that's been doing this for 30 years. That's all, just a regular schmegular. But I'm gonna go with Nvidia on this one. I ain't thinking about him. I'm going with Nvidia. Let's give you his conclusion. So he says, in order to deliver a 10% annualized rate of return to its shareholders, Nvidia would need to do 200 billion in net profit, and they would have to do 580 billion in top line revenue. Okay? So he says, for respective annual increases of 25 to 50%. Conclusion, here's his conclusion. The chances of dwarfing the numbers now posted by the likes of Apple, Microsoft, and Alphabet are remote, to put it mildly. But simply, investors have hiked the bar for what the AI pioneer must achieve so high that it's most likely to prove a great company and a poor investment. Well, I don't know. Tell that to them people who was in at 190 a share and 10x. I don't know. I know. I know what happened with those people. I mean, they must be happy. But I think more of this company than this guy. But again, this guy could be shorting the stock right now. His company probably shorting the stock. You know, it's about 38 billion in short positions. He's probably one of them. See, this is what they do. They come out when they're shorting the stock and they want to paint this picture so that they can scare retail investors and scare people. Because they're shorting the stock. His firm is probably shorting the stock. His firm probably got part of that 38 billion that's shorting the stock. That's the way I look at it. Right? So let's keep moving. Actually, we're going to end right there, guys. I got to get out of here within an hour. So we'll have to spend a little bit more time on the ARK. We'll have to keep up with Kathy Wood and ARK Investment. I'll try to hunt down their, the analysis that they did. And if my simple educated self can figure it out, I'll share it with you. If I can't figure it out, then I may have to direct you to a smarter YouTuber who got the fancy charts and things he can put on the screen and better internet connection, because y'all know my internet will get raggedy in a minute, right? It'll get raggedy. So hopefully it didn't get raggedy this afternoon. This morning it was ferocious. I mean, it was just terrible this morning. Terrible. But thank you guys for sticking in there with me. So there we go, man. Kathy Wood believes Tesla will get to $2,600 per share by the year 2029, and I'm right there with her. And I'm rooting them on. And I've already told you in 3.0, here's what I'm going to have. I'm going to have Chipotle after the 50 to 1 split. We'll have Chipotle. We're going to have Broadcom, right? Because I want to throw one more in there behind Nvidia. We'll have Broadcom after their July 10 to 1 split. I'm not buying anything before the splits, right? Chipotle at $3,000 a share, there's no way I'd buy that. Not me. But when it go to whatever it's going to go to, I'm in like Flynn, right? I'm going to get me some. Throw it in 3.0, throw in Broadcom in 3.0, throw in Visa in 3.0, and then throw in more Tesla. Tesla will be the lead dog in 3.0. I'll make the bigger investment in Tesla. The second biggest investment will go in Broadcom. The third will go in Visa, and then the last will go in Chipotle, because it's a fast food restaurant. I can't put them first. Fast food restaurant. They mess around and get salmonella or something in one of them salad bowls, and my stock going down the drain. I can't go with that. I'm willing to take a chance on it, but boy, you get some salmonella or something like that in one of them salad bowls, whew, I don't know what you're going to do with that stock. It's going to be hard to come back. So I'm not going to mess with that too tough, but a little bit of something. And then you guys know 2.0 is all dedicated to Nvidia, big boy position there. And then obviously y'all know I got 1.0, which is the 50-30-20 with the big boy ETFs and the Mag 7. Big boy ETFs, Mag 7, and then we got 2.0, only Nvidia, and then 3.0, I just gave you what those stocks are going to be, right? And what's the split? 80-20, that's the split. Now I might go 75-25 because I want to make more room for Tesla. So I may have to go 75-25 between the three strategies or the three blueprints. I may have to go 75% ETFs, 25% individual stocks to make a bigger move on Tesla, especially with my girl, Kathy Wood, coming in strong in 5 years. Can you think about that, guys? $175 a share right now, and that thing go to $2,600 a share. Now, I know a lot of us think that's a pipe dream, but guys, I'm an optimist, man. I just believe anything can happen when you got great companies and you got great people leading those companies. At some point, anything could happen. Anything could happen. So I just, I'm gonna throw some money at it, and we'll see how it plays out. Again, guys, if you want to take advantage of any of these opportunities I just talked about, and they're just opportunities, you need to get down in the description box. 18 to 80 years old, it's not too late. You can sign up for Moomoo, get your brokerage account put in place, put you some money in there, and then you're ready to go. You're ready to try to chase down your financial goals by using paper assets to do it. Remember, there is no guarantee when you're investing, guys. I'm not a financial advisor, so I can't tell you what to do. All I can do is present an opportunity to you. You have to make sure that opportunity is the right opportunity for you. And you got to also understand there's an element of risk associated with buying paper assets. If you're risk adverse and you do not want to take any risk, do not put your money in paper assets. Put them in a CD at your bank. Put them in the money market at your bank. They'll be protected, they'll be safe, and you'll get a little bit of return. But if you want to come over here to where the big boys play and the big girls play and take on a little bit more risk, you can get a bigger reward. Little risk, little reward. Big risk, big reward. That's how it works in this country and across the globe. You want a little bit of risk, you get a little bit of reward. That's where the CDs come in. Little bit of risk, actually no risk, but you get a little reward. You go get a treasury bond, no risk, but you get a little reward. You come over here with the big boys and the big girls and you start playing around with these paper assets. As long as you stick to big boy blue chip, you got a chance of doing well. Again, history tells us the stock market is a wonderful place to multiply money, but you got to be prepared for the ups and downs. You got to be prepared for the mental game that it'll play on you, because you're going to see your money one day making money, and then the next day you might see you losing money on paper, though, not realized, but on paper. And you got to be mentally prepared for that. And if you're not, and you are risk adverse and you do not want to have your principal compromised, stay yourself over here, low risk, low reward category. But if you don't mind taking on a little extra risk, Richard, I'm not going to put all my eggs in that extra risk basket, and you shouldn't. All right, I'm going to take 60% of it and keep it over here at low risk, low reward. But I'm going to put 40% over here, high risk, high reward, and let's take a chance. Then get down in the description box, click on that Moomoo link, 18 to 80. 18 to 80, no excuses other than you understand big risk, big reward psychology, right? You got to understand big risk, big reward psychology and understand why you're doing this and what are you trying to get out of it. As long as you understand that, click on that link down in the description box, open up that Moomoo account, put your $100 to $1,000 in there, get you up to 15 free stocks, send your boy that email through his website, www.richardfain.net, and let's get going. I'm going to send you those tutorial videos. Again, I'm not a financial advisor, so don't be sending me, Richard, let me send you my money so you can, no, can't send me nothing. I don't do that. And I'm not going to tell you what to do. So don't email me, hey, what should I do? That's your decision. Here's what I think. Here's what I do. You got to make your own decision, just like I had to make my own decision. I don't tell people what to do with their money. I present opportunities. You got to step up to the plate, put your big boy pants on, your big girl pants on, step up to the plate, make a decision, and then live with it. That's what we got to do as adults, guys. And I'm not trying to preach to you. I just want people to understand you got to make the decision. I can't make it for you. I can't. I will not. So I know me sit up here lying to you. I can't make the decision for you. But what I will do is I will give you the opportunity by saying, hey, here's the homework I've done, guys. This is what I believe, and this is why I'm putting my money in it. From there, you gotta figure that out too, right? So as long as we're in agreement on that, I will send you that information. You send me that email, and then what you probably want to do for a lot of you guys that are beginners and don't know what's going on, you want to tap into my private mentorship club, because a lot of those folks over there know what they're doing. A lot of them are beginners too, and they're learning, but you got a lot of people over there that know what they're doing, not just me. It's a lot of folks over there on my platform and the mentorship club that know what they're doing. and making a lot of money doing it. It ain't just me. You got other people over there. We got 600 of them with all different levels of financial literacy, all different levels of investment experience. So all I'm telling you, instead of you being out here on your own by yourself trying to figure this thing out, join something that can help you figure it out. Now, again, like I told you, it's a paid membership club. So I ain't trying to 3-card Monte you. It's paid. So when you get over there, it's $15.99 a month. This ain't a 3-card Monte. That's the fee. Either you pay it or you don't have to join. It's that simple, right? You don't have to join. That's an investment in you, not in me, right? So if you don't want to join, don't. But if you do join, I think it helps you. So put yourself around people that can be there for you and they're going in the same direction. And a lot of these people have taken an interest in the video. They've taken an interest in the rest of the things that I do just because why? Hey, if I'm watching this guy and I'm joining his mentorship group and I'm mixing it up with him, hey, some of the homework has already been done. He don't guarantee me nothing. His money in it. Maybe I'll give it a shot. But just be an adult to understand that's your decision, not mine. Okay? All right, guys. Appreciate you, man. I'm going to shut this thing down. I'll see y'all tomorrow at 10 a.m. Not 10:30 a.m. tomorrow morning because I got something to do and I need to get in and slide in a little bit early in these YouTube streets. So I got to slide in a little early in these YouTube streets tomorrow and it's going to be at 10 a.m. Eastern time. That's the live stream. So I'm going to slide in a little earlier so I can slide out a little earlier, right? Slide in a little earlier, slide out a little earlier because I got some stuff I got to do on Friday. So I hope you join me. We're going to have more stuff to talk about. Hopefully you enjoyed this conversation this evening and you got some nuggets from it. You got some tips. You got some golden eggs from it. Now it's time to do what? Got to go get this money, man. Got to go build this wealth, right? Let's not let the 1% get rich and we don't get nothing. We got to get something too, not just the 1%. So lock it in with a thumbs up before you get out of here, guys. I certainly would appreciate that. Thank you so much for watching my YouTube channel and supporting me like you have over the last 4 years. Thank you so much. Thank you so much, right? Thoughts become things. See it in your mind, hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys tomorrow.